Trade what you see, not what you think. Trade what you see, not what you feel. Trade what you see, not what you hear. This mantra, believe it or not, has gone a long way to improve my profitability as a forex trader, as well as reduce the risk exposure I face on my trades. Also, a blueprint I've actually laid down for all my mentees in the path I've illuminated for them in their journey to profitability as forex traders. In today's video, I'll be taking you through one of the simple and then basic trading concepts I'm sure you've heard of for a very long time, but you might not understand how to apply it. You might not know a much more simplified way to go about it. This strategy is simply called the break and then the retest strategy. It means that the market actually breaking out of your key level, either your key support, your key resistance level, your trend line, whatever it might be, it coming back to hit that same level is what we call the break and then retest. I'll be teaching you how you can easily maximize trading opportunities when the market gets back to where it initially broke out from. This is what we call the retest. So a break and retest simply means that the market breaks out of your key level, then comes back to respect that key level again. So when the market comes back to your key level, what do you do when it comes there? If you can't wait for this video, make sure you like this video. Also make sure you subscribe to the channel and then hit the notification bell so you get notified anytime I go live or drop a video on YouTube. Without wasting my time, let's get right into it. So if you simply look at this Euro AUD setup, you can actually see I actually took a trade on this one. So I took a trade on this Euro AUD setup yesterday around 5 p.m. and then I held it onto this morning. I'll be taking you through the basic techniques I used to actually take this trade, how I applied it, when I took my entries, when I took my buys, where I placed my stops, and then all that. So if you look on the screen, you can actually see my MT4, where I took the trade, where I have my stop loss. I currently have my stop loss at entry, expecting the market to push a little bit further. We actually have some fundamentals coming in this afternoon, so I think I'll trail my stop to see how far the fundamental is going to take it, whether it's going to reverse from there or it's going to keep pushing to the upside. What we simply, when we talk of a breakout, is let's say we have a resistance level here, and then the market gives us an initial high to create this high in this level. It means that when the market gets back into this level, we normally expect it to give us what? A confirmation for a sell, so we're able to catch a sell to the downside. If you also have a low being formed by the market this way, it means that the market respecting this low, we normally expect it to come back, respect this low, and give us a buy opportunity in here. But as you always know, the market might not always respect what you expect to happen, which is why I always say trade what you see, not what you feel, not what you think, not what you hear. The market can create this high here. You expect it to normally come down this way, but what do you see? There are so many instances where your market rather breaks out of this zone. So the market trading out of this zone is what we call a breakout. And then to spot a breakout, what I normally always want to see is I want to see a strong candle close beyond this key level we have here. So today I'll actually be taking you through the point where the market can actually come back and I respect our previous resistance here. So the market coming back to respect this level is what we call the retest. So the break and retest simply means that the market runs through your resistance, your support, your trend line or whatever, but it actually comes back to respect the same key level again. So it's coming back to respect the key level is what we term as the retest. The same thing can also go for a support where you have your low, the market goes up. When it comes back, we expect it to respect this low, but what do you see? Rather what breaks out of this low. This is what we call a retest when it actually comes back to respect this low. In this instance, this is what we also call the retest with regards to the support. So now this same concept can also apply for your trend lines as well. Let's say we have an uptrend. We have what? Higher high, higher low forming. Planning on shooting a video on my trend lines soon. So you have your first touch and then your second touch. You are basically waiting for the market to hit it for the third time, and then you take a buy on it. So what it simply means with your trend line is that you actually want the market to hit it for the third touch, then you actually find a buy in this zone. So you are normally looking for a buy at the third touch. It can also be what? A downtrend where you have the market going up, down, and then going back up again. So now you have lower high, lower low forming. You draw a line through your point of inception and then your second touch. If the market comes back to hit the trend line for the third touch, I'm expecting it to actually what? Sell in this zone. But like I said, today we are talking of breakout and then a retest. So what we simply mean by this breakout and retest is that there are so many instances where the market, instead of it respecting your third touch, can easily run through your third touch this way. So this is what we call a breakout here. And then in this instance as well, it can also easily run out and then break through your trend line instead of it respecting your third touch. So now you look at the same trend line we have here, the market can also come back and then give us a retest. Then we try to catch a sell to the downside if we have significant bearish presence. And then over here as well, the market breaking out, going to form the new high, we can also simply expect it to come back, hit the trend line, then we catch another buy to the upside. So today, what we'll simply be doing is actually centered on the trend line break and then a retest. Today's strategy, we'll be talking about how I actually caught a buy when the market came back to hit my trend line for a retest. In subsequent videos, I'll basically be taking through examples of the other four. But basically, when we have a breakout and then a retest, these are the examples of a retest reversal strategy that we have. So back on the chart, you can clearly see my trend line in here. I had my first touch, my second touch, now waiting for the market to hit it for the third touch. I remember what I said. When you draw your key levels, when you draw your trend lines, whatever you wish to draw, if you simply want to come back to it when the market gets to them, you can easily just tap on it. Use this symbol to set an alert on. So you don't need to be seated by your chart 24/7. You can simply just set this alert. So anytime the market actually approaches or hits your trend line, you are notified. So you can now come onto the chart and then make your trading decision. After plotting our trend line, we simply just wait for the market to react to the trend line. So what do? We wait for the market to move. Then we can actually decide if it hits the trend line. So now you realize they actually hit the trend line, but the next one was what? A strong breakout. We want to see if we actually have a retest on this Euro AUD setup. So you realize that the market is going up. They actually started consolidating up there. We wanted to see if it was actually going to come back to hit the trend line at any point in time. So we make our decision on it. So after days, the breakout was actually last week. Then we had our retest this week. So what we see here is what we simply call the retest. It coming back to hit this. And then what we also have here is what we simply call the breakout. What are we now looking for? We are looking for our entry. What is our entry criteria? We want to see our consolidation or our candlestick patterns here, which gives us what? Significant bullish presence that the market is actually going to go up. So do? Like I said, I simply just wait, because now I'm expecting to take a buy from this particular level. So you realize I had a strong bearish candle, I had a small doji, and then I had as well this bullish candle here. I simply just decided to take my entry at the closure. If you look at the candles here, if I was trying to take my buy here, you realize that my stop loss would have been too much because I was expecting it to be. So I actually decided to wait for a pullback and then decide on what the market was actually going to do. I don't like to go beyond 50 pips when it comes to setting my stop losses. So with this particular setup, the reason why I could risk about 50 pips on it is because it usually travels more. So this candle actually dropping down and then pulling back was where I took my entry on this trade. So my entry price was somewhere around 1618. Somewhere around 1618. It dropped all the way down here, then it started pulling back. So once I saw it, starting to pull back, I actually just swiftly went to the 1 hour time frame. Remember what I said in my last video? I like to combine, time frames anytime I'm seeing a pullback. So this was 5 p.m. This was where the 5 p.m. candle was. It brought it down. Then the next 1 hour candle, I saw it was pulling back up. So it brought it down, started pulling back, closed this way. Then the next 1 hour candle, which came at 6 p.m., started pushing it upwards. Now I expected it to keep going up with strong bullish momentum. So now my entry price was simply at 6 p.m. So I actually entered this trade at exactly 6 p.m. Now this small pullback I see on the 4 hour represents what? A bullish candle in here, which was taking the market back up. It means that at the moment this particular candle closed and then started going up, I now jumped in, took my buy. Remember, like I said, everything I do is based on structure. So my stop loss, I actually looked at the consolidation here, then I placed my stop loss right below this closure here. My stops were here about 44 pips on this setup. Then I was expecting to make at least 100 pips. My stops was right at the bottom of this range. Then I also had my entry price in this candle, which, like I said, I actually found on the 1 hour, because I like to do multi-time frame analysis anytime I spot a pullback. Anytime you see a pullback, if you like trading on the higher time frame, anytime you spot a pullback, just switch to the lower time frame and then see what is happening, because the lower time frame tells you what is happening on the market. Now we are back on the 4 hour. Stop loss at the bottom of the range, take profit also all the way up here. Remember what I said about my TP1? My TP1 is always how much I'm risking on a trading position. It means that on my MT4 or my MT5, this is my TP1, this is my stop loss. I have my entry price because that's exactly where I bought the final TPU. Then my TP2 was actually here. We have our key levels, we have our stop loss. What did the next candle do is simply just run through our take profits. And then one thing about this particular pair is I moved a lot during the Asian session or during the Australian session. So now we smash both take profits. The market is actually currently trading around this region. We want to see how far to take us. If you're going to keep holding, like I always say, your stop loss should always be at your entry, meaning that you're protecting your capital. There are so many instances where the market fails to respect your resistance level, it fails to respect your trend line. Anytime that happens, you just call that a breakout, when it breaks out of your key level. But there are so many instances as well where that particular breakout, the market actually comes back to respect the key level again. So like I said from the beginning, trade what you see, not what you feel, not what you hear, not what you think. It's very, very important for you to understand and then find perfect entries as a trader. One thing that has actually gone a long way to help me as a trader is finding good entries. So if you enjoyed today's episode, make sure you like this video. Also make sure you're subscribed to the channel. Hit the notification bell so you get notified anytime I go live or drop a video on YouTube. Comment, share this video. Also keep up with me on my socials. KOMMONFOREX on Instagram, KOMMONFOREX on Twitter, KOMMONFOREX on Telegram. Also head on to the link in my description to join the KOMMONFOREX trading community where I share daily trading insights as well as trading signals. Click on the link in the description to also sign up with my recommended broker. Thank you very much for tuning into today's session. See you in the next one.